Hello and welcome back. Let's try and hear out from the management at Happiest Mind. The management is now joining us. Narayanan, Managing Director and CFO, as well as Mr. Joseph, who is Executive Vice Chairman, Product and Engineering. Sir, thank you so much for taking out time for us. Congratulations on a good set of numbers. It's been strong revenue growth of nearly 10% in USD terms. EBITDA margins are largely stable in the environment looking in strong. What led to this performance?
So, we'll take it at both the profitability and revenues. I'll give a little bit of color on the revenues and request Venkat to give a little bit of overview on the profitability part. On revenues, we've seen a strong performance across all verticals. We've had very good growth in high-tech, edutech, media and entertainment, and retail, and to a smaller level, at an absolute level, growth in the other verticals. An equally heartening factor is that we've seen on an absolute level, revenues growing across all the geos that we have, US, Europe, India, Middle East, and ANZ. And the geo that I'd really like to call out again is Middle East. We've seen robust growth. And, we have a couple of large customers that have got created, which can act as an anchor. So, and we see this trend continuing for the rest of the year with an uptick in demand that can be sustained. Venkat?
Yeah. See, coming to margins, EBITDA numbers have been at 26.1% for the quarter. So that's very comparable to the 26.3% that we did in Q4 and higher than the 25.6% that we did last year. So Q1 of last year. So if you look at it, margins, we have been able to maintain it. While I have been guiding, saying that we would be looking at stabilizing between 22 to 24% in the medium term to long term, as the benefits on account of COVID and work from home retreat, we will see margins getting down to the 22 to 24%. We have been able to maintain the 26% margins. Now, one should account for the cost increases that we have taken. We have had wage increases during this quarter. And we have also had subcontractors cost going up. And also we have added 310 Happiest Minds to our family. So to that extent, we have added costs. At the same time, most of this has been defrayed by the volume growth in the strong growth of revenues that we have seen. It's almost double digits, 13.5% on a QOQ basis and about 36% year over year. So we have been able to defray the costs and get the benefits or the efficiencies which start to accrue on account of growth and size.
About deal wins during the quarter, what have you added in terms of clients? Which are the segments that you are looking at in terms of greater traction? You have already mentioned that Middle East is doing well. What are the other geographies you are performing well in?
So, if you look at the deal wins as we reported in our press release, there are several, we have 18 new logos that we were able to close during Q1. And again, heartening factor is that these new logos cut across all the geos. There's not really a concentration. So the deal wins have been distributed and secular across all the geos that we operate in. And it's in different verticals also. We have a few deal wins in the industrial segment. We have a company in the electrical vehicle infrastructure space where we're helping them with some edge analytics. We've signed up with a very large security company, helping them with their product engineering needs. We've also signed up with a large US-based telecom supplier to help them out with some of their cloud security needs. So it's cutting across analytics, COE, automation, IoT, from a center of excellence technology perspective and across verticals and geos. So it's a diversified performance.
If you look at the customer additions, we have ended the quarter with 180. We were at 173 last quarter. We've added 7 new billion-dollar corporations into our named billion-dollar corporation accounts. Million-dollar customers has gone up by 5. So we have gone from 26 to 31. This is the highest addition in the last 2 years, if I look at that metric, which we have published. So we are seeing customer account wins, traction within existing accounts, and also the projects that Joseph talked about.
Good afternoon, Mr. Narayanan and Anantharaju. This is Cheryl also joining in into the conversation. My question is actually a little broad-based. Our talks with industry players suggest that large players in large geographies like United States want to partner with maybe 1 or 2 large IT service provider who can offer the full-scale IT services solutions to them. Could you tell us how Happiest Mind is actually differentiating?
Notice we've always had to compete with the large players, because when you get into your billion-dollar customers, most if not all of them have some outsourcing partner already. And the way we've been differentiating ourselves is figuring out some of the pain points or areas that we know would be pain points for these customers on the digital side, and going in and helping them to understand the trends that are taking place depending on the area that's been identified, whether it's security, connectivity through IoT or analytics or automation, and act more as a trusted partner to these customers and help them figure out their roadmap and their plan. And that differentiates us, being a digital native company. And once we get in and start helping these customers, we then have a very strong account development and account mining strategy, which then allows us to, do the land and expand. And once we've delivered successfully, do the land and expand. And once we've delivered successfully, we have a reference inside and a sponsor inside the customer. We look at how do we expand into other areas and help them with the other digital needs. So that's the study that has worked out for us quite well so far.
Also, if you look at it, vendor consolidation was something that people used to talk about. Right now, the demand from the customers are so high that they are actually not looking at vendor consolidation. This may not be the time. They want to get the projects off the ground and into the market. So to that extent, they're looking at people who can deliver, who can help them take it to market quickly, speed to market, time to market. These are the things that they're looking, rather than the efficiencies that come out of a vendor consolidation. So these top 2 vendors into billion-dollar corporations is a story of vendor consolidation, which has not really happened if you look at across the spectrum of the Indian IT business, because you typically enter a customer and you are then able to stick on with the kind of value that you deliver to them. If you look at the billion-dollar corporations, like I said, we've added 7 numbers, and we have ended the quarter with 53 billion-dollar corporations. So that itself shows that we are able to endear ourselves to our customers, large ones, small ones, because we do bring strategic value to them.
Top industry players have actually guided for a double-digit growth. Can we expect same from Happiest Minds? And also any progress on the M&A possibilities that the management has been actually talking for the past few quarters?
You're asking about double-digit growth. We have already delivered double-digit, high double-digit if you look at year-over-year and quarter-over-quarter. Now, the trick will be to maintain the same trend. Like we mentioned in the quarterly and our analyst call, we are looking forward to adding the same number or higher number of Happiest Minds. We added 310 this quarter, and our expectation is to add a similar number or a higher number for the next 3 or 4 quarters. And as far as long-term to medium-term growth targets, we have been not guiding, we have been suggesting to our investors that we are looking to grow 20% on an organic basis. So FY22, yes, we are likely to be better than that number, but we are saying that this 20% number is something that we would like to do on a medium to long-term growth number.
And as well as Anantharaju, we leave it at there. Thank you for joining us on the show and giving us your take about Happiest Minds for the quarter gone by as well as for the way forward. And that was the management of Happiest Minds talking to us. Remember, the stock saw a sharp downtick and opened from there. It's actually recovered in trade. Now it is down about 2.5%. On that note, we slip into a break on this edition of Markets at Noon. But stay tuned more on the other side, so don't go anywhere.